Hi everyone, welcome to a Monday Rapid Fire. Hope you're all feeling well today and not too emotionally affected by what happened on the weekend. Always good to have a plan, always good to have some dry powder on the sidelines for some big capitulations in a bull market. I think we've seen exactly that. Some geopolitical news came out, it shook up the open interest, and a lot of derivatives, especially altcoins, got wiped, and some of them were down a staggering 40, 50%. Even more. So yeah, absolutely crazy. If you're playing around with leverage, these are the ways that you can get absolutely wrecked. If you're in spot positions, a lot of those positions would have, mostly or partially recovered by now. So if you have that longer term focus, that's where most investors should really be, sitting and not being affected by the shorter term stuff. So congratulations if you played dead. Again, congratulations if you actually took the initiative and got comfortable, feeling uncomfortable, and lent into the market. Whenever I see 30, 40% discounts in a bull market across the board, I'm a buyer no matter what. Doesn't mean you bought the exact bottom. It shouldn't have to mean that either. You're just accumulating, you're stacking your bags, and you're really positioning for that high conviction move that is sure to come a little bit later. And I say sure to come, I do not know that for certain, but I have a high conviction that it's going to happen because it has happened previously in history, which is to the halving. We've got some great news coming through about the Hong Kong ETFs being approved as well. So I see no issue with this, especially with the money printing that is going to come at the back end of the year. So let me show you an indicator that I brought out today with our mastermind clients that I think it will provide some serious alpha. So we're actually seeing spot buyers come back in the market on this low, and that is super, super important. So there is a spot premium. So it costs more to buy the spot price. Just shows you that there is demand coming, there's volumes coming in, those spot buyers are really coming in hard on the dip. You love to see it. Alternatively, this whole move higher up to about 73,000 there was a real heavy weighting towards futures, derivatives. Open interest was really, really high. It's not a sustainable move, or at least it could be. You could keep moving higher on that, but eventually there is going to be a pretty significant flush out, and we got that. It doesn't mean it was market specific. Obviously, something outside affected the market. It caused a lot of panic and fear, and it allowed for that big move down. But this is hugely healthy. The last few times we've seen spot buyers really come in, that spot premium rise, it's in these lower areas after a larger move, capitulation. You're buying the dips at certain levels, and then after that you can see after a while the derivatives do take over again. That's where you have to be a little bit wary. And over here as well we saw similar spot premium, and then it started to get a little bit hairy again. But that's something I wanted to show you there, something to keep in your back pocket if you want to get a little bit more detailed with the data. Now, Bitcoin, where are we? So I'm looking at the RSI a little bit here because it's down at 42. Now, the last time we were in this area, would you believe, was down when we were at 38,000 and 42,000 region. So that was a pretty significant move. The daily, of course, can go lower to these kind of areas, but it would be a little bit rare in a bull market. But if you go down to the 4 hour, the 1 hour, and a few other timeframes, we had almost total wipeouts. We're touching 25s, 20s on most of these altcoins, if not lower. Also, Bitcoin was quite heavily depressed. This is kind of what exhaustion looks like. Now, this may not be the end of this chop, sideways chop and just grind essentially under this previous area in between 73 and whatnot. But I think that may have been the low. That's just my feeling, but it doesn't mean we can't now grind back down to the wicks down here a little bit, retest it, try and find a higher low situation. Don't discount that either. But I think that might have been the violence of the move sort of over and done with. So the stock RSI is now at a pretty lowish area. So I think we're starting to see the beginnings of a bounce here. Again, it doesn't mean we're breaking out to new all-time highs, but I do think that this is the basic. Everything that happens from here on in, this is all the platform. The new bull market leg starts now. This is when it starts. We need to be hyper focused on building those positions and leaning in when it feels uncomfortable. Of course, like sentiment wise, as soon as you feel like the bull market might be over is kind of when it's not and it's about to reverse again. That's my feeling. It's what I've sort of lent on a lot over the years. And again, being comfortable, feeling uncomfortable is one of the best lines ever, because it's so true. You never feel like buying when you should be, and you never feel like selling when you should. So those are just two things to keep an eye on. And of course, we could go lower into those 50,000s over the next little phase. Doesn't mean we can't do something like this and coming down to the final low, but this is a pretty good zone. I'm seeing a lot of panic and fear out there, a lot of capitulations across altcoins. That's a really good sign for Bitcoin to have its next leg. Now, here's the total market cap, excluding Bitcoin, Ethereum, and stable coins. almost rounding out the perfect cup and handle basing pattern here for me. This altcoins were just ripping to these kind of areas, and I guess people just think we keep going. It just never happens that way. We had a really good bull market flush. I mean, these that's a 30% move. They were dime a dozen in the last bull market and the bull market previous. So there's still going to happen. We don't have institutions just buying all these bags. So there's still a lot of sentiment driven coins, a lot of derivatives in a lot of these, and when they get overextended, this is what can happen. It's what's capable of. So just be wary. So this here, I think, now starts to grind and base here for the next move higher. It's not going to be immediate, but we're just going to see that slowly, a lot of the capital slowly return to the market, as long as we see no further escalation in the Middle East and a lot of the war stuff. So Monday is kind of the D-Day for me, that if equities open up just rubbish, and I suspect they might initially, and then they should recover. Again, it's hard to know, but historically we've seen Bitcoin and crypto actually lead the massive sell-off events in risk markets and things like equities. So, and we know that they're closed over the weekend, and Bitcoin's largely driven this. So holding 65,000 and even 61,000 at the depth of the low with Bitcoin was a really good thing to see for Bitcoin's strength. Just shows you those buyers are just there. So whenever anything between that 10 and 20% margin, it starts to dip below or dip greater than that 10% or even a little bit under, there's buyers that are willing to come in and really hold up this market. And again, like Bitcoin really hasn't moved between that little range that it's been in between 73,000 and 60,000. Hasn't reached that. Altcoins are the ones that took the absolute clubbing, and it really does show sentiment-wise across the market when everyone thinks it's completely dead. It's because they're all in altcoins versus Bitcoin anchoring themselves in a really large asset. Now, I wanted to show you what complete almost crypto exhaustion looks like in an altcoin. Again, there's no guarantees. This could go lower, but just broadly, these patterns play out. When you see them, you're like, okay, this is probably the bottom. You see, this is Arbitrum. It's just been killed from the token unlock up here. It's a 65% drawdown from the highs. So you can see there, all the way from top, all the way to the bottom. And it's come all the way back to retest these lows that it had back in 2023. All this price action in here was effectively wiped out, and it's a one-way train. That is just straight down. So for me, this low, I think, really holds here. Stoke RSI on the daily looks bottomed. The RSI is the lowest it's ever been. You look down at every time frame, it's absolutely nuked. Even the weekly looks at the bottom. So these are the type of opportunities that are just screaming buy. And you can just zoom back to when it started. It's been in this big kind of region. So this here, don't think it gets that low. This is overall just like a higher low from the bear market to where we are now. And now it should climb out. And I say should. And that's how I kind of see it starting to move. And V-shaped reversals, just be very careful expecting that. And that's what a lot of leverage players will think will happen when they come back in and get on leverage, and it just moves. I think it's just moved straight up. It's not the case. It will chop around like that sideways and just build out. But I just wanted to show you ARB in terms of a crypto that's just been smashed over the head. Again, it's often when it looks completely done where you want to be buying and leaning in. We go for launch Hong Kong set to green light Bitcoin and Ethereum ETFs by Monday or Tuesday, according to Bloomberg. So there's really positive catalyst here. We've got halving as well, and survived this little period. And these drop. It's not even the first massive drawdown we've had, but you just need to remember it, put in your bank, and as a learning lesson for next time, that in a bull market, the most ridiculous retracements can happen. You just have to remember that, and it's just clearing the path. It's out of the ashes, the next leg starts to happen. And so, with no leverage and derivatives in the system, spot buyers can really just take on over and create some really organic price action. So for mine, my opinion is, we have the perfect platform now to move up to 80, 90, 100,000 in the next few months. But it doesn't mean we can't just chop around here and base for a little bit longer until we start to break out. We see a bit of disbelief and then we move higher again, because we are in that we're in that really nice purple patch where we're heading into the huge expansion phase of the bull market. That's my feelings. What I've had for a while. It's what Joe thinks as well. It's what we've been talking about in the mastermind group. So. This might be a little bit longer for you guys as well. I wanted to give you a little bit more coverage, a little bit more depth on what we're talking about. But yeah, I have no problem buying these kinds of areas myself. So yeah, hope you have a great day and you weren't too affected by this market, because I've heard some horror stories already of people getting a little bit over their skis, over leveraging themselves, trying to get way too ahead without sort of positioning themselves appropriately and smartly, and not just taking on too much risk. And I shouldn't say smartly, because there's people that are just trying to create a better life for themselves, but you have to do it in a measured manner, and risk reward, that means something. So there is a ton of reward in this space, but you just don't want to put too much risk on yourself, because one bad move, one bad call, especially on leverage, and your entire portfolio can be gone. Versus if you're doing spot buying, creating a portfolio, having dry powder on the side, buying those corrections, looking for those, again, I don't want to say smart play, but it is waiting for those moves to come down, you DCA in, creating that portfolio, lowering your dollar cost averaging buy price. Happy days, go up from there. So guys, hope you have a wonderful day, and we'll catch you in for our next video. Bye.